Well, the SGX Nifty is a bit flat. Let's see how things move on. Today, of course, at 11 a.m. we have the BJP manifesto. That's going to be the most important cue of the day to watch out for. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning. Ashwini, we had that last hour rally on the Nifty and the Bank Nifty. Your thoughts on how to approach trade today?
Well, good morning. The last hour rally happened because there was an extremely narrow range, and my sense is that we could first open a bit lower, 20-30 points lower, and then from there pick up steam from there. So the idea is to buy any sort of 20-30 point decline, say 11, 730, 740. And similarly on the Bank Nifty, again, it was a large rally in the last hour. So again, say 30,000, 150, 200 would be a good place to buy into the Bank Nifty.
All right. We'll see whether that dip comes. That's what the SGX Nifty is indicating, not indicating a very bright green, but then it's not often called the market, right? Good morning, Sudarshan. Your thoughts? How do you trade the indexes?
Good morning, Lata. Well, the markets went and made that lifetime new high for a fraction of a second last week and then retreated. And that's quite often a normal process because at untested levels, the markets get nervous. I would assume that the markets are now ready. The Nifty is ready to go back to that level again, 10,760, and stay there for some time, not just a fraction of a second. So with that view, I would expect the Nifty to slowly rise another 100 points to reach that level. Usually, it seems a reasonable proposition that we will go and test that once more and keep a successful test. Whether we go up from there, I don't know. But there is a rally here at the current levels. And today can be a dull day in the morning, afternoon, I can't say. But I am a buyer in the Nifty, expecting a test of the earlier highs again.
Okay, a buy in the Nifty. Mitesh Thakkar joins in as well with his views. Hi Mitesh, good morning. Would you concur with that view that even if today is a slightly flattish kind of day, it's still better to buy on dips in this market? And what would the target levels be on the index today?
Good morning very much. I think I do. My sense is that this is still a market which will need some more consolidation. I don't think we are ready for a breakout as yet, and 10,750, 760 on the upside would be a supply point, and 10,620 and then 10,550 are two support levels. So in that sense, buying on dips is definitely something which is on my agenda, because I still believe that the overall direction is on the upside and eventually there will be an upside breakout. So that's the kind of view which we have. We are trading with stock specific basis on normal side, but on the indices, I think buying is only advisable on dips. On the Nifty, as I said, I think closer to about 10,600 or below it. On the Bank Nifty, closer to about 29,900 or just around it.
Okay, let's discuss stocks then. Sudarshan, good morning. What are you buying or selling?
Well, good morning, Anuj. It's mainly buying and also looking at some heavyweights. Infosys is a buy. After a long trading range, a minor dip. All IT stocks did well on Friday. I think that follow-through will be available today in most of them. So consider buying Infosys. HDFC is also a buying opportunity. It's been an outperformer. That outperformance should continue even in a flat market. We may have less gains. That's a different issue. But it's worth buying into. Bajaj Finserv has been on a roll. Then it had a narrow range for 3 days. That should break on the upside. See, unless the markets say we are going down, some of these narrow ranges we saw on Friday or Thursday will eventually break and give higher levels. So that's Bajaj Finserv. JSW Steel is building a base after months of declines, almost 4 to 5 months. That's a positional trade. You can actually consider buying it and holding it for a long time, or take a day trade for today. CG Power is the only short sell. That chart has this horrible falls every day, but be on the buy side.
Okay. Thanks for that. Ashwini, you have a buy on some of the financials, including Bajaj Finance. It's just that today crude is higher, so I'm wondering if that will work. But more importantly, I also want your views on IT.
Well, crude has been higher for last 2 months. If something has to go up, it will go up, whatever the reasons. And staying with financial is helpful because financials are outperforming. So even on Friday, from a negative bank nifty, you rallied 250 points. So all that, never really matters to me. Having said that, I think the banking rally is probably going to continue. Private banks are doing extremely well. So any sort of decline should be bought into. Having said that, Canfin Home is a buy with a stop of 355, target of 372. Chola Mandalam is a buy with a stop of 1470, target of 1510. Bajaj Finance is a buy with a stop of 3100, target of 3165. JSPL is a buy with a stop of 182, target of 194. And Vedanta is a buy with a stop of 188, target of 200.
Okay. Mitesh, what about you? You have 3 buys and 1 sell call this morning?
Yeah, that's right, and the sell is on Colgate. In fact, HUL and Colgate both have gone through some kind of corrective action. Colgate is still expanding on the negative side, so take a sell with a stop at 1241 for targets of 1200. 3 buy calls: Tata Motors DVR, that's a buy with a stop at 9570 for targets of 106. Tata Steel, it's been a recommendation earlier, and metals are doing well. So Tata Steel now can be bought afresh with a stop at 539. Look for a 570-75 kind of a target. And Marico is a buy as well. Keep a stop below 350. Look for targets close to about 370.
Actually, the Tata Steel buy is actually kind of confirmed by Nigel as well. Pointed out to some very strong numbers that they have reported for the month of March. Okay, now let's turn to one of the big deals that was announced over the weekend. It was a long time coming. CNBC-TV18 had broken it and spoken about it a goodish bit. Baring Private Equity Asia is going to buy a 30% stake in NIIT Technologies from NIIT, the parent company, and the other promoter entities. Baring will make an open offer to buy up to 26% stake in NIIT Tech from minority shareholders. We have some experts to tell us about the deal. Ravi Menon, analyst IT at Elara, and Ganesh Natarajan, chairman of 5F World, join us now. Good morning, both of you. Thank you very much for joining us. Mr. Natarajan, should we take it as a given that now that Baring will have 2 major IT companies, NIIT Technologies and Hexaware, it's logical for investors to think that they will be merged?
Maybe not in the short term, Lata, because I would think that they probably keep them separate. But eventually, yes. I mean, I think what you're seeing in the industry is a clear flight to scale, because given the complex nature of transitions to digital, etc., it needs large companies or very small niche companies. So I think the era of the mid-tier is pretty much over.
Okay. Ravi Menon, analyst at Elara, also joins in. He tracks the stocks closely. Ravi, hi, good morning. NIIT Tech has seen a significant re-rating. Even if you look at the past 6 months, it's gained about 30-odd%. You think a lot of the news is in the price, or do you see further to go on the upside?
We think that there is for the upside. We have a price target of 1,500. But having said that, that's a 1-year price target, and I think 1394 is a reasonable price, for the moment. But I do hope that they will be allowed to continue, their strategy and do these tuck-in investments that have actually worked very well for them. So they bought Instant Technologies a couple of years back. That's done well for them. Now, along with this deal, we also seen another small acquisition of about roughly $40 million that's been done called Wishworks. That's in MuleSoft. So I think such niche capabilities, should be added. With the other investment that Baring has in Hexaware, we've actually not seen them do such acquisitions. So I hope the focus will be on allowing the company to continue executing its strategy.
Okay, you wouldn't be happy if they merged, as an investor, I mean.
I think that if the strategy is allowed, and then the 2 CEOs, both of them have had a very short term, I think, at the helm. So it will be difficult, and I think both are well regarded in the industry. So it's actually going to be tough to decide who gets to run, and especially NIIT Tech. I think they've done a lot of senior management hires very recently. So I think it will be upsetting to merge it right now.
Okay.
As Ganesh said, maybe at a later stage it might be good.
Okay. Ravi, good morning. Whether merger or not, but consolidation clearly is happening in the mid-cap IT space. We have L&T also now acquiring Mindtree. Your thoughts on the kind of moves we're seeing in mid-cap IT, and Your own thoughts, what are your top picks in mid-cap IT?
So I think that the mergers, it definitely is a good sign, that people want to make sure that they are more broad-based, they're not exposed to any single vertical or a single large client. That helps. That larger portfolio does help even if you have setbacks in a couple of client accounts. And it also helps, cross-sell capabilities. And in the case of, I think, Mindtree and LTI, we had brought a note, talking about how Mindtree has a really strong presence in the high-tech vertical. LTI, has a much smaller presence there, and LTI's BFSI capability is really strong compared to Mindtree. So it seems to be a natural fit. Here in Hexaware and NIT Tech, I think the travel vertical, both of them are really strong in. So I think it may not entirely make as much sense, but still, I think yes, these firms will be in a fairly good position.
Okay. Mr. Natarajan,
and,
actually,
our top pick is Zensar, where I feel the margins have.
Sorry, go ahead. Sorry, Ravi. Your top pick?
No, I was saying that our top pick is Zensar, where I feel the margins have bottomed out. We think that the management is doing a good job of positioning the firm in some hot spaces, like Guidewire implementation for insurance in the US.
Mr. Natarajan, you should be very glad to hear that.
Yes, of course.
But I wanted to ask you what we were discussing with Ravi just a little while ago. What does it take when businesses like this are merged? After all, Bearings has entered at almost the 52-week high for NIT Tech. So they will have to wring out at an 18-20% IRR from that investment. What might they do? Do you think that the businesses themselves will be disturbed with this overhang of merger? Just tell us how investors should approach the two businesses.
See, I think Bearings, people like Jimmy Martani are very veteran investors, so they know what to do. And in any acquisition of peers, if you will, I think there needs to be a very strong focus on improving the bottom line, because there's a lot of stuff they can clean out. But at the same time, I totally agree with Ravi that if there is a strategy for the firm that is working, whether it's tuck-in acquisitions or investing in specific niches, I think that should continue, because the future is all about extreme competence in a few areas, whether it's robotics or artificial intelligence, machine learning. So I think
you don't want two HRs, you don't want two accounts, you don't want two SG&A.
Well, naturally you don't, and I think that's the first thing they'll do. But at the same time, if there are distinctive competencies, accentuating that, maybe doing more mergers, investing heavily in that area, I think that is what one would expect private equity to do.
Okay. Ravi, I just had one question on how should you approach NIT Limited now. NIT Tech, you said that, there's an upside, 1,500 is your target price. But NIT Limited, the stock has underperformed. Not only that, the core business has been struggling for quite a bit. So what does one do here?
So we have been covering this for a long time, and we've been believers that the core business is turning around. I think most people don't understand that the portfolio has changed a lot. People think of it as a retail training business that's India focused, but a majority of the revenues, close to between 75 to 80% of the revenues now comes from B2B training exports. So the working capital cycle, the capital requirements of that, similar to IT services. So it's a business that is definitely high return on capital. So there is, I think, going to be a significant re-rating for NIT Limited after this transaction. We now have a price target of 192 for NIT Limited. That's more than 100% upside.
You don't just take the special dividend and run. You should stay put. Yeah.
Yes, we think that people should stay put, and I think they should. Yeah, they should return some cash to shareholders.
Okay.
Yeah.
All right, gentlemen, thanks a lot for stopping by. You guys have a great week, and thanks for talking about this deal with us. Well, that's an analysis of the deal. But do remember, you can catch the management at 10:30 a.m. this morning live. Rajendra Pawar, the chairman of NIT Tech, will lay out the deal fine print. It's time we put F&O Strategies, and Vinod Sharma of HDFC Securities has just joined us. Good morning, Vinod. So, is it likely to be all-time highs this week?
I think the all-time highs are likely to continue, but we are beginning both the result season and the election season.
Yes.
So I think one will have to be when it's on toes. So you never know what kind of result will come in later during the day. So you look stock specific and not at the index per se. Having said that, let me first wish all of you, your anchors, your guests sitting in Delhi and otherwise, a very good health. Okay?
Thank you.
Because if you're healthy, then you'll be able to enjoy all the wealth that CNBC will help create for your viewers. Okay. I'm beginning from my story with Bajaj. The lesson is that you shouldn't change what hasn't broken. So you continue with the trend. So Bajaj Finance, I'm continuing to buy along with the rest of your guys. I'm buying the 3,200 call at 60 rupees, stop loss at 30, target of 120. And another banking stock, I'm buying Federal Bank. Although it ran up 4% on Friday, I'm buying the 100 call at 3.45, stop loss at 2, target for around 7 here. And my high conviction pick continues to be steel and cement that I spoke last week rather. So I'm continuing with Ultratech. I'm buying the 4,200 call yet again with the stop loss at 136. I'm buying it. Stop loss at 90. Target of around 225. And two the stocks.
Yes,
Tata Steel?
Yeah, Tata Steel. Tata Steel is a stock which has built a position on Friday. For the whole series, 8% OI, 10% OI has been added. The stock is also up 8% in the series. I'm buying the 560 call at 12 rupees, stop loss at 9, target of around 18. And iShares is one stock which has just started moving up. So I'm buying the 21,500 call at 411, stop loss at 300. And a target around 650.
Right, Vinod, thanks a lot for all those trading ideas. All buys from Vinod this morning. Cement, autos, banks is what you have. Some of the sectors doing well. Gautam Duggad is with us, Head of Research at Motilal Oswal. Gautam, hi, good morning. Thanks a lot for joining us. I wanted your thoughts first on Maruti, because that's one stock which is showing signs of a fresh rally after hitting 52-week lows. Are you positive on this one?
Yeah, Anuj, in fact, it forms part of our top ideas. It's been the part of top ideas for a long time now. Clearly, this is one stock which we like in auto space currently, where the space is seeing slowdown across the board, be it two-wheeler or a four-wheeler or a CV. Maruti, one can derive comfort from the fact that the market share is intact and it's still a very structural and a secular play in an otherwise under-penetrated four-wheeler market in India. Obviously, nobody can predict what can happen to the monthly numbers over the next 2-3 months. But for the March month, our the numbers that they reported were slightly better than expectations as far as our estimates are concerned on the domestic side. So clearly, this is one space within the autos pack where we are slightly more positive than other segments of the auto space.
Likewise, okay, I just wanted to add, likewise for Eicher Motors, I mean, we were just discussing it technically and that's why I thought of it, seems to have put in a bottom and higher bottoms are in place is what the technical experts tell us, but fundamentally?
Fundamentally, I think this stock can go nowhere for next couple of months, while the downside seems limited now, but a lot depends on how their monthly number shapes up. If the new normal is 60,000, 55,000 in that range on a monthly basis, then I think there is some more de-rating which is still left. Already the stock has done nothing for the last 2.5 years. So a lot of the pessimism seems built in the current valuation. What can drive the stock lower from here on is if there is any incremental downtick in the monthly volumes, because incrementally competition has gone up and they have seen some traction in their own numbers. So how Eicher reacts to that over the next couple of months, I think that will derive the fundamental direction of the stock. For the quarter, we are expecting a very muted set of numbers from them. We're actually expecting a 15-16% YOY decline in the profits of consolidated entity. But that is actually the case for all the auto universe that we have. We're expecting more than 25% YOY decline in earnings for our auto pack, which will be, I think, the third consecutive quarter of more than 20% YOY decline in profits.
Okay. Gautam, hi, good morning. What about Indiabulls Housing? Its quest to enter the banking sector has finally come to an end with that merger with LVB. Do you like this pocket at all?
See, the deal is obviously win-win. Both are, quite complementary in nature. Indiabulls gets access to the liability franchise, and I think beyond just this deal, what one needs to understand over the last couple of years that we have seen in the space is there have been 4 such transactions. Be it Gru, Bandhan, or IDFC, Capital First, or for that matter, IndusInd, Bharat Financials. So I think this has set the stage for more such deals going forward, because the funding side of the balance sheet has been stressed over the last 6 months, and we have seen pressure on deposit mobilization across the banking space, barring 1 or 2 top-notch entities. So therefore, from that viewpoint, it does augur well for Indiabulls Housing Finance. I don't think they will have any drag from CLR, SLR requirement either, given the substantial cash which is present in the balance sheet. However, we have put the stock under review, as we we haven't yet firmed up the estimate because LVB was not under our coverage.
Gautam, your thoughts on cement? From being the most hated space, it's now a bit of a consensus buy, and we've seen the move in names like Ultratech Cement, for example. Your top picks in this space?
Yeah, Anuj, actually cement, if you notice, has more been a more of a trading bet over the last couple of years, and the reasons are not very difficult to find, because if you see last 10 years of cement profitability, the 2008 profits of cement universe was 10,000 odd crores, and 2018 profits was 10,800 crores. The recent up move that you have seen in the cement stocks has largely led by 2 factors. One is the quarter-on-quarter decline in some of the key raw material, elements, whether it is freight cost or petcoke cost, and that is, incrementally driving some interest in cement stock. Secondly, anybody who wants to play the infrastructure space in India today has very limited options, either roads or L&T, which is a consensus buy, and the roundabout way of playing the same infrastructure story in a slightly more cleaner manner is through cement stocks. What we have done in our model portfolio yesterday is we've replaced Shree Cement with ACC, because we think the profitability gap there has narrowed and product mix has also improved, plus there has been some cost rationalization which is underway at ACC. So within large cap, that is what we like in the cement space. Ultratech, still the numbers look very hazy on a quarter-to-quarter basis. Still we see some stability in numbers there on the P&L side. I will refrain from taking any outside exposure there.
Well, somebody has already opted to take an upside exposure in it, Gautam. If you can hold on for just a minute, we have a detailed report on Ultratech from CLSA. Nigel is here to tell us the highlights.
Well, CLSA is highlighting that the recent hikes that we've seen in cement prices, that bodes well for the sector, and in particular the big name like Ultratech Cement. So they've upgraded the stock to buy from outperform. Not just that, they've increased the target price as well by nearly around 12% for in terms of the target price. It's more than 5,000 rupees approximately. They highlight in the last couple of years we have not seen any big growth in terms of EPS on Ultratech Cement. In fact, there have been some pressure on EPS. But going ahead for the next couple of years, they're expecting a 44% growth in terms of a CAGR from FY19 to FY21. Couple of factors they're highlighting out here. One is better pricing. Second factor is that, in fact, costs are likely to remain stable. And that's what's going to help in delivering better EBITDA per ton growth. Besides a better operational performance, they're also expecting some kind of deleveraging on its books. So on the back of that, CLSA quite bullish on Ultratech Cement. Back to you guys.
Okay, thanks a lot for that, Nigel. So that is CLSA's view coming in on the cement space, particularly on Ultratech Cement. But Gautam, moving on, I wanted your thoughts on HDFC Bank, because they have released an update for Q4 where they say that the loan growth has improved to 24%, which is the best in the last 5 quarters. Do you think it makes sense for long-term retail investors to up their exposure to some of these marquee names like HDFC Bank?
Absolutely, Sonia. I mean, there's very little one can add to what is already known about HDFC Bank, whether it is an institutional portfolio. If you see, it's by and large the single largest stock owned by most of the guys on that side of the table. The data which came out over the weekend clearly points towards one incremental trend which is emerging in the financial space, which is the market share migration incrementally towards the banks with a very strong liability franchise, and that is what you saw in both the deposit growth as well as the loan growth. one of the most consistent compounders over the last 2 decades, and we think that trend will continue.
Okay. IT, Gautam, I mean, now the rupee has started weakening, and then there are all these big deals happening. So specifically NIIT Tech or Hexaware and IT in general.
Okay, Lata, IT, over the last 4 or 5 quarters, we have seen a very consistent double-digit profit growth for the sector. And in the last 3-4 quarters, incrementally, the Tier 1 has outperformed as far as earnings growth is concerned, which we think will happen in this quarter as well. Our own estimates are for 13% profit growth for IT in this quarter, and a reasonably strong top-line growth as well, which is typically a weak sort of a quarter seasonally. So reasonably strong performance that we're expecting there. As far as the deal is concerned, clearly that momentum has been very strong in this sector. The value at which this deal is happening is very close to our own fair value estimate of around 1400 rupees, and which is why we have had a neutralist sort of a stance on that name. Stock has already risen in anticipation of that deal. Incrementally, there could be some arbitrage related upside here and there because of the open offer, but substantial upside is already factored into that price. In the space, what we like right now is Infosys, and from the mid cap point of view, we like Zensar.
Okay. Gautam, your thoughts on PSU banks and whether there's anything that you want to buy here? We've had a big rally in names like SBI, PNB, Canara Bank.
Yeah, Anuj, actually our long-standing preference in PSU has been towards SBI, and we have increased our weights on model portfolio for SBI again yesterday. So SBI remains the single largest holding for us as far as our model portfolio is concerned. A quarter back, we had added PNB as a trading bet in our model portfolio. That seems to have worked out well. But still, by and large, if you see the whole banking space, the preference continues to remain towards private corporate banks. We have to see how the whole asset quality turns up while expectations are very strong. The recent change in the whole RBI circular and narrative around that does put some sort of uncertainty in the resolution process going forward. Plus, some of the resolutions which have been going on for a long time has kept on getting delayed. So while the expectations for FY20 earnings growth are very strong, the execution still needs to be watched out for. For the quarter, clearly PSU banks are the single largest driving force behind the incremental earnings delta. In fact, if you strip out PSU banks in this quarter's earnings, you're getting either a flat or a minus 3-4% kind of an earnings growth, whether you look at Nifty or for that matter any other broad aggregate grouping of stocks.
How the tables turn, don't they? Thank you very much, Gautam. We never have enough of time to ask you questions, but then out of time at this juncture. Thank you very much for joining us. Have a great trading week.